Hi there, Serial Trader here. Let's just do a review of the day trade example I presented in the previous video. And we'll just start off with identifying the tools here. So the main screen is a 10-minute candlestick price chart. And the teal line is a 3-period exponential moving average. The black line is an 8-period exponential moving average. Don't worry about the other lines because they're just artifacts from what I use on the daily and for instance the weekly. But the blue line's a 50 period simple moving average, the red line's 200 period simple moving average, and the gray line is the 20 period simple moving average, but that's not really being used at all on this time frame. It's just the teal and the black, so the 3 and the 8 EMA. And then obviously candlestick price bars, although regular bars are fine too, but I like to have the candlesticks on my 10-minute. Okay, and then we have the stochastic setting, and the K period is set to 12, and the D period is set to 3. And other than that, you just have the oversold line at 80, and the overbought line at 80, oversold line at 20. That's pretty standard. And this just graphically helps to mark quite reliably, tops and bottoms on the chart. And okay, and then we have this 2-minute price chart, and this is using just open, high, low, close price bars, OHLC bars. And we have 3 different moving averages. So we have the 89 period exponential moving average, we have the 55 period exponential moving average, and we have the 21 period exponential moving average, again on the 2-minute price chart. And what you're looking for is, okay, so these moving averages on the 2-minute price chart, if they're falling nicely like this, obviously the trend on this time frame, so 2 minutes, is down, so you want to be looking for a trade in that direction. You want to make sure that trend lines up with the trend on the 10-minute price chart, and it certainly did in this case. And then, okay, so you don't necessarily want to be chasing this down, because where do you define your risk against when you're just falling like this? You might get lucky and just jump on, but where do you establish your stop? It's troublesome. So I don't typically take trades like this, because you don't know. This could just reverse and bounce at any point, and where do you have your stop? You don't know where you have it, so you probably don't have one. Or you might just think, oh, I'll get out if it turns on me. Well, believe me, it can turn very quickly in a leveraged futures position in particular. So what you want to do is wait for a pullback. So in this case, we had what appeared to be a nice corrective advance. And I'll get to that later. That actually ended up not being correct overall, but it didn't impact the result of the trade. There's one point where your analysis overall cannot pan out, but the trade is still a viable trade setup. And being that it is so short term, the overall wave outlook or forecast doesn't matter that much, but it's still helpful. If you see a short-term, corrective or what appears to be a corrective pattern, it adds confidence, along with all these other technical tools. So anyways, on this 2-minute price chart, well, first of all, on the 10-minute, we had the parallel trend channel, and that's just connecting the low here and the low here off of the high here. Started breaking below that, so that got me interested. And we also had the 3-period exponential moving average cross below the 8, so that's a nice bear cross on those EMAs. And we also broke below the T line itself, which is a good, at least short-term indicator that things have turned back down in this case. It would work the same way if we were going down and looking for a turn up, but in this case, downside was the outlook. Now, on this 2-minute price chart, so you had this nice expansion of the moving averages, obviously falling down, quite bearish, good short-term bearish action. Now we had this correction up, and these moving averages kind of compressed together. But keep in mind the 55 was still below the 89 this whole time. Now the 21 curled up, but then when it came back down, okay, so the 21 came back down and got below both of these moving averages. They're all aligned in the right direction, which is down. And then we have this 14-period Williams percent R. And in this case, when you're looking for a downside trade setup with all these moving averages aligned the way they are, and this nice cross with the shorter one below the longer ones after a crunch, your signal to go short is when the Williams percent R gets oversold, and that's what it did here. So that's where I established a short position on the ES futures, sold a contract short, right? Now after that, the trade, temporarily goes against me ever so slightly, not a huge deal, but goes up a point or two. But it's fine because this whole time we stayed below the T line, and the actual protective stop was above the high right here at 28.16, 17 on SPX. It was actually a different number on the futures slightly, but I'm just using SPX as a benchmark here. Now, I think the futures were trading at a premium to SPX, so it was a slightly higher number. But the point is, this having an actual level, nice correction up, and then reversal, and then defining your risk against the top of that after you've already started turning down, that's a good stop, and that prevents you from just getting stopped out from some little short-term noise like this, If you had your stop too tight, well, you get stopped out, come up, stop you out, you lose money, and then boom, after that, it goes right down where you expected it to. So you don't want your stops too tight. You want them tight, no doubt about it, and this is tight, but you don't want them stupid tight. And, okay, so as soon as that happened, and then we started coming down, Williams percent R got oversold again, which is a great sell signal, and the moving averages were nicely in alignment to the downside. And instead of riding this down and catching, the maximum possible move, I sold too early, intentionally, and, made a nice, I think it was $567, if memory serves correct, on this particular trade, in about a 30-minute time period. So basically, my overall approach with day trading is not to try and hit out of the park, make home runs, because that usually leads to big losses and frustration. My idea is make it easy. Okay, so make sure you're trading in the direction of the trend. Don't try and do a counter trend move, because that usually that works less often than what it succeeds. That's all there is to it when you're trying to go against the grain. Secondly, you want a nice corrective looking, in this case, corrective bounce, but in an uptrend it could be a corrective pullback. You just flip this upside down. This applies the same way in an uptrend, just backwards. And then you want a nice clear level to define your risk against after it already starts turning in the direction you're expecting, okay? So you're not trying to pick the top or the bottom, in this case the top. You're letting it identify its top. You're letting it commit and roll over and break some, trend lines or whatever you have, get the moving averages in alignment, and then you're looking for that momentum to be in your favor. And then you just want to enter, and in this case, I think I caught 1.5 points on the futures. So 1.5 points doesn't sound like much, and it isn't. But on 8 contracts, that's just under $600. So that's really my objective, is make it super easy, super consistent, use a reasonable amount of leverage, pretty high leverage, to amplify a small yet very likely move in your favor, and get out. Get out before it turns and goes against you. You're not looking to kill it, you're just looking... So I look to kill it on my big positions, like, the weed style trades, where I have a real, we'll say conviction of a large move, time consuming, big trend. That's where I look to grow the nest egg and actually, build the wealth up considerably. Now, what I'm looking to do on trades like this, these day trades, I'm just looking to basically create a consistent, near daily income, just for paying the bills and regular expenses of life, and keeping that completely separate from my activity of actually growing my wealth on the bigger swing and position trades and things of that nature. So this is just meant to be the day job, just cranking it out consistently, pretty much day after day. I mean, not every day offers day trading opportunities, but you're not going to go through a single week without several of these. And sometimes there's certain days where there's 2 or 3 or more of these in a single day. And those are good days, but the point is you can make a very good income aside from all the other trades you do just doing this. And that's definitely my game plan. That's what I've been doing. All right, and well, you saw the last video, and it was a successful trade, and nothing wrong with it. but I thought it'd be interesting to show what happened afterwards. So I got a just a small piece of this 1.5 point move. It did go, reasonably lower, a few points lower. Okay, so there's certainly more profit potential, but that's not what I'm looking to do. I'd rather be too early than too late. Always with day trading, sell too early, not too late. I've done both, and believe me, too early is much better, especially when you do 100 trades. If you do 100 trades too early, much better than 100 trades, or I should say much better than 50 trades too late and 50 trades too early. Do them all too early, that's the best. You still make a lot of money, and your losses are infrequent and limited when they take place. But anyways, I thought it'd be interesting to show, okay, so we didn't actually come down and challenge or make new lows here. As much as this looked like an ABC up, it wasn't. It was actually a 1 up, 2 down, and we started rallying nicely towards the end of that day after I'd already closed the trade in here somewhere. And at that point I was already out. I was done for the day. And then we came up in this third wave the next day. And then we had a 4 and a 5. So we actually have a 5 up off the bottom. So the trend has actually changed to the upside now on the 10-minute chart. So you can see, we still captured a nice move. We weren't actually correct in thinking that this was a ABC up to be more than fully retraced to the downside, but it didn't matter. We were still correct in identifying that short-term weakness and just catching a small piece of it and then getting out with a nice profit. So that's just my explanation for the day trading strategy. And maybe we'll do some more videos like this in the future. Alright, Serial Trader signing off.